There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now. Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today we had a pretty bad down day, closed a tiny bit off the lows, but overall it feels like the damage has been adding up. I know that on Monday we had that wide-ranging engulfing bar where a lot of guys like myself got out of portfolio approach, got out of whatever 5, 6, 7 positions that I've had left over from this run, and said, you know what, I'm going to wait and see. And then, you know, I went out short that day, and then Tuesday they pushed the envelope a little bit, and then today opened lower, had some morning follow through, and then it became a bit of a choppy mess. You know, but overall, if you look at the pattern here in the S&P, you'll see that, you know, this type of pattern, if it's going to build, and you heard it on TV, you heard the guy at lunchtime because I was talking to him about this in the gym yesterday. You know, this head and shoulders type pattern. The reason why it's a somewhat of a topping pattern, because it's a distribution pattern, where here you're in a normal trend. You know, this doesn't really mean much by itself. Typically, you know, just part of what has been a really nice trend from the start of 2013. You know, a few little bumps along the way. Then typically, like we said, the head gets created when you push through a major level where people get, you know, squeezed, or they have to cover their shorts, and then some people chase it, then you come right down. But, you know, with that said, you know, I would think that big money likes to, you know, they like to push the envelope a little bit, go back and forth in order to create a little bit more time to get rid of some stock, to distribute the stock for then what could be, you know, a break in this move, to then give you, you know, a measured move of whatever this is. This is what, 1597 to 1540, about 60 handles, takes you down to, you know, right around here, which was really just a support from when, you know, we bottomed into the Italian elections. And by that point, the 200-day will probably have moved up. But again, at this point, you don't really know that, but I would say that technically this is what I think we should be playing for in the next coming weeks. If you look at, you know, what took place, I tried to show you guys last quarter. You know, this was that really nice move that followed the 8 and 21 day. Here was this, you know, left shoulder. Here was your head. If you guys remember, you know, this happened to be, and I actually gave you 2 little exits. This was the accelerated trend that took place in March into April, came in, you know, hovered support. It felt as if it was going to break here. You know, didn't have enough time, went back up, came back down, and then finally broke. So you look how long this right shoulder took to build. And then here's, you know, it looked like it was going to happen quick here too with the left shoulder, and it took, you know, a little bit longer. So that's why, you know, I don't think you need to be, obviously every trend is different, or every pattern is different, but I just don't think it's like when you try and short lows here, it's still probably not the most prudent thing to do until we get some more data. But overall, I think having a cleaned up approach in your positions, especially if you're an intermediate trend trader, is prudent right here. I'm not sure if IBD will, you know, went to market correction here. They might wait for one more day. I'm not sure. I'll talk about that later. I'll tweet about it. But overall, I think they went to market under pressure here, which says kind of wake up, guys, clean up loose positions, especially ones you don't like. And then with some more time, you know, we could see that. And I would say what would happen, you know, if we're really that weak, it probably starts to build a little area lower here. So this way, it shows you that the bounce is more feeble, and then it can happen quick. As far as some of the other sectors, they're still trying to hang on. You know, I talked about the home builders after the beige book. They got a bit of a bounce. Here's that long-term trend line. Still not giving you a full break of it, you know, considering the move it just had from 30 down to here. So, you know, same thing here. This, if it wants to, could continue to bounce around a little bit. Now we'll see if you want to create another channel here. This was a small red dog reversal. but overall, now see if it bounces back to the moving averages or stays in the bottom end and then rolls over for some downside. But so you could trade both ways on it now. IYT, transports, an inside day here as this continues to build. The longer it stays in here, the higher the probability it breaks. And when a lot of these things start to break, then we'll maybe cheat a little bit and get a little bit more short in the S&P. But right now, this is building and it's been a heck of a run. So with that said, it's now on the right side of this trend that it was following since November. So you want to be a bit more cautious. As far as the Russell, let's see what that did today. This was the measured move we talked about. It briefly went through it, and it didn't close on the dead lows, but look where it was. What was this, 5-6 sessions ago to where it is now? So it might need some time to hover down here and drive everybody nuts. So with that said, just make sure if you're in a swing short, just have a little less size and don't try and press it on lows here. Otherwise, you might not let it work out. And then we've been talking about Apple for a while. If you look at go look at the front of the website, we put a big blog post together about 6-7 different inflection points that we talked about. To be careful, to make adjustments, to put on long shorts, get flat, whatever it is based on your time frame. And today finally another trade triggered. On Monday I did a small video saying that we have about a week until earnings or more. So if they want to break 419, they can. I know I got a little spun around yesterday. I was trying to short a lot and I got squeezed. So today did go back to it, made some money short, but I only stuck around for like 420 down to 415. And I was like, you know what? I'm going to get out of the way. So I'm glad a lot of you guys took advantage of it. You look at Apple right here. This has been the trend, and there's been a lot of nice trades along the way. Obviously, the way to have gone is to have leaned on it short, which I did not do. I tried playing more bounces, and from this one being the best one that we had, and then it gave way to the start of 2013, igniting bar, failed. This was the most recent one. Remember those two call spreads? We dissected that pretty well, and then it failed right there. And then finally, another nice setup below this support. Here was your low, here is your double bottom that led to nothing, and then it came back in, and then pow. And I know it happened quick, so you had to really be prepared. We had it on the price point sheet like 420.50-ish, but really the trigger was 419, and it came a little bit off the lows towards the end of the day. Big deal. But really, you look at this chart now, and there's not much to the left until about what is this? This is we went through that already. I think we talked about 396. It went to 398, and then this little pivot right here is like 377. So we'll see. Again, it's Wednesday. A lot of time between now and Tuesday when earnings are coming out. Who knows? Maybe they try and retest it. But at this point, the longer it stays now below this area, this 419, the higher the potential that if it trades through today's low tomorrow, you get some continuation. But overall, I don't think anyone in our community, or maybe Barry, sorry to say it, because but I feel like he admitted to it, whatever, that he's been holding this thing for this entire way down. Give you a shout out. I love you. You've had a great attitude about it. But I think guys have been taking it in stride. Yes, we've had some paper cuts, and some of them have added up. But at least you haven't been cost averaging the whole way down and creating a gusher that could put you out of business and could put you in the poorhouse. So I do think with some of those paper cuts, we had those nice 3-4 moves that made up for it, and then some. And then finally today, I think we were targeting not a bounce, but we were targeting the breakdown, and I felt as if a lot of people were happy there. As far as some other things that I think was working for people today, people were still pointing out some strength in like Nike. Still some nice strength there. Boeing, hanging around. Coors was up a little bit today, but look at this trend to the downside. So yes, was this a red dog reversal? For the day it was, but I think now you want to be looking for just day trades with this strategy. Pushes through a low, holds a 200-day first time. Perhaps make money in it today, and then if we open up tomorrow, sell some. There are times when when the red dog reversal is good for potential inflection points, and then times just to trade for cash flow with a plan. And at this point, I feel like the pressure's on the market. We still have to figure out what's going on with the coward terrorists that that are on the loose from the Boston bombings, and then we've had these letters, but I think the weakness started before then. So I do think that this is not the end of this corrective period. I think it's in the third inning, and I'm not saying it's a top of the year, but again, just like last year after an enormous first quarter, why not have a 3 to 6% pullback, in the indices, and then figure out what's next. And again, if you look at the SPX, it's still not confirmed. It's just a pattern building. And every time we've done this in the past, the pattern did not confirm. Or not say every time, but it obviously built a few times back then. I'm saying so far this year, where this finally looks as if it has the makings of it. So for me, I'm going to stay in tactical approach, taking day-and-a-half trades, hopefully, or more probably from the long side. I mean, not the long side, the short side. And then it sometimes hold some swings to the downside, depending on where we're at. But for now, you want to be in a lot of positions with a lot of size when you're in a strong trend and there are not that many question marks like we've seen when you hug the 8-day, you hug the 21-day. And then you want to have high-level stops and sell some strength, which I think a lot of people did. And now you be in wait and see. And then at some particular point, if we do continue down and some point, whether it's tomorrow or in the next 2 weeks, the pattern triggers below the neckline, we'll have a plan to see where it gets fulfilled, whether it's this 1510 or 1490 if you look at the chart. And then that's when you look for a major red dog reversal for a trend trade like we saw here. Remember the last time IBD had us in a market correction was right around here, okay, right around this break. And the NASDAQ actually broke first. And then from there, we broke below, came back, retested, and then pow. And then look what you had here to start another move, a red dog reversal. And then what did you want to see, which we've talked about many times, if you want to see a potential new rally, you want to see appetite, and then you want to see it hold higher. So even if you missed this first part of the move, this was your time to accumulate relative strength type plays, and then from there, you had a quick move to the resistance, held again, and then we all know what's happened there. So at this point, the question is, can we get another tradable down move to make cash flow, and then look for the best in breed stocks out there for a potential new move? And one more, I guess, to talk about one more time, you go back to that other head and shoulders pattern here that wound up working out. Look what the sell-off was in late April, came into May, and then it gave you another move. So, and this also came on the heels of somewhat of a red dog reversal. Not blaring, but, made a new low, came back above it. Then you saw appetite, hold higher. So even if you missed this first part of it, this is when you could have accumulated some, relatively strong stocks for then what was a pretty choppy trend throughout the summer that intensified here. But overall, that was the start of the move after this corrective period that took you all the way to the 1474 September highs. So that's what I mean by trading different intermediate trends. And when you get to a point when you're a little wishy-washy about what this intermediate trend could lead to, do a little less. If you're not great at being short, try it a little bit. I'm not great on the short side, but at least I'm not going to be holding multiple positions and saying, okay, I'm a diehard bull, because I'm not. I'm a diehard trader. And when it's conducive to have longs, I'll try and be there. When stocks are breaking out, making 52-week highs, it's a lot of fun, especially when they don't break out and fail. At this particular point, it's not that trading environment. It's more like, okay, trade a level versus a level, see if there's anything showing relative strength, maybe things that are weaker. We could actually short those lows and get followed through to the downside. So every stage of the market, when the complexion changes, you just got to change with it. And if nothing changes and we hold 1540 for the next 2 weeks, and then we continue from there, there'll be a group of stocks that we put on some portfolio approach, and that could have been it. So right now we don't know. We're just going to have a plan mapped out, let the market confirm it. We're going to know ahead of time so we can move fast, because at times when at those action areas, you have to move fast. Just like the macro break last Friday in GLD, you had to know 148.50 was your time to move fast. So within this noise, okay, after breaking the intermediate area in the GLD, which happened to be around 161, you had to know that if this bad boy breaks below 148.5, you better be out of it, especially if you're long and if you're looking for that short entry. You didn't have that much time. Okay, but those prepared who knew because of the pattern that was being built, okay, you said, I am going to make that adjustment, and you had about 15, 20 minutes on that Friday to do so. If you look here, okay, it opened around 140.5, hovered there, and then boom. And a lot of guys could have saved themselves some money if they were long gold knowing this area, and some guys who jumped on short, congratulations, and those who took it home short that day as it closed on the dead lows got paid. And now you have this little lower range in the GLD and with not much of a bounce, so you could see another discount here. This thing breaks below 130.50. I was talking the other day that I think that 123 to 127 is ultimately where it's going to go, and the low here is right around 129, and then right around here where it had that prior breakout is about 123. And if you also, some guys or some technicians measure the channel, which from 172 to the 148 is about 25 points, that takes you down to this basic area. So I would not be in a rush to buy gold, and if you're going to short it, a few days just went by, so maybe it's ready for some continuation because it really is not bouncing that much. So if you come back to me, we'll see what happens. I hope everyone in Boston is if you've been injured, you're feeling better. If one of your family members was involved, and hopefully you're doing okay. It's just a mess, and it's a heartache thinking about what went on and the 3 individuals that died and the 29 amputees, and it just shows you that our liberties are always at risk. And it's a life. You definitely have some things that go wrong in your day to day, but if you put it in perspective, how bad was it? If you had a bad day today because you didn't catch as much of Apple short that you wanted, okay, big deal. So just keep everything in perspective. Try and be positive. Glass half full, even when the market's coming in, is better than a glass half empty, because if you embrace the volatility and you look at it and you don't ignore it, you could actually create the opportunities from it. And just go home, spend some time with your family. On the East Coast, it's beautiful out. Try and get outside. Have some outlets, because outlets are key. That's what keeps you balanced. Scott Redler, T3 Live tomorrow morning. It'll be Brittany and John. I will be in a little bit later in the day. Have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.